Okay. So you've heard me talking before about indicators and how I use indicators and how I can predict the market. And I say one of these days I'll show you guys how to do it too. Today is the day. Today is the day we'll take a look at some indicators that I found. Can't tackle them all. So an indicator, they if you're using TradingView, which I highly recommend you do, go to tradingview.com. You can set this system up. All this is a platform that allows you to view stocks. For instance, right now I'm looking at the VIX, which is the volatility index. You can add it to a watch list over here, so you can quickly choose between the stocks and ETFs and futures markets that you want to look at. This just kind of gives you a view of what's going on. But inside of that view, you can also have set up indicators. There are thousands. I mean, literally thousands of indicators that are out there that you can use. And I've done hours upon hours upon hours of research to find the right ones. And what do I mean by that? All right, how accurate are they? What do they do? What do they communicate? And how actionable is the information they provide? So actionable information, let's talk about that. And let's talk about just today, because it's a great time to talk. It's 8:25 in the morning. The markets could open at 9:30 coming out of the holiday season. So I'm kind of curious what the market's going to do. Is the market going to open up? Is it going to open? Is it going to go positive, or is it going to go negative? So there's a couple things that I look at, and of course I use my indicators to help me. Um, so let's look right now at the volatility index, the VIX. Okay. Long story short, when the volatility index goes up, it means there's more fear in the market. There's more indecision. People are concerned and worried. So you don't have to know all the facts. You can, of course, you can go to YouTube and do your own research to find out what the VIX means and how it applies. But for you and me, for simplicity, a point of view is if the VIX is rising, it means fear is rising, means concern is rising, uncertainty is rising. And hey, what is that good for? Well, that's good for making the market crash, right? And that's exactly what typically happens. When the VIX rises, the market falls. Fear, right? They're going to take the money out of the stock market and they're going to put it in bonds and anything gold. They're going to put it somewhere other than the stock market. So when I start the morning, one of the first places I look at is I look at the VIX to see what the VIX is doing. Now I left one indicator on here. I'm only running one indicator. This is just a line that I drew on the chart, and it's called the half trend. So if you have this platform running, you go to indicators and you would type in half trend. It's one of my favorites, right? But you can choose it. It wouldn't be a starred. You can just go in and find it in this half trend, right? And you would select it. And when you do, you would have all it does. It shows you. Actually, I can hide it and show you what it does. This is what the chart looks like before half trend comes in. Before you have any indicators, you just have the stock price. You have no idea what it means, how it got there. If anyone could have predicted what's going to happen and why, when you're sitting here, did you know it's going to go higher or lower? Right? How would you know? Well, you'd need to have either a really good indication of what its history was, or I cheat and I use calculators. All right, and that's what this is. It's a calculator. And I won't bore you with the details of how it works. I can just tell you that it works. Very, very well for me, and I'm sure, and of course, it would work any well. It would work well for anyone who wants to use it. So let's look in this given time frame. We're looking at a 15-minute time frame, and we're looking at in the morning. Well, it was putzing around here, minding its own business, doing nothing, nothing, nothing. All of a sudden, you got this little triangle there that says buy. Okay, well, you have to trust your indicators, and are they successful or not? And I show you how to I show you how to back test these, but now we can back test this now and take a look at this and say on the 22nd of December, got a buy symbol. We'll see if it panned out. Well, did the market go higher since then? Well, I would say yes. Did you see any other indicators telling you to sell? No, right? It says positive and it stayed positive, and then sure enough, it took off. The same thing is going to happen here. We did great. We just took that trade. We swung high, swung high. Maybe we got scared here and we sold for a nice fat profit. Good for us. Now, what do? We wait for our next indicator. Our next indicator is right here. It tells you to sell and get the heck out. Well, or if you're playing both sides of the market like I highly recommend, you would know if the VIX is falling. You're going to know that if the VIX is falling, fear and uncertainty is reducing, which means the market may be recovering. So more than likely the market's going to start going up. But in this example, we're looking at trying to treat VIX like it's a stock instead of an index. So well, doesn't matter. The same principle applies. We can look at any. Let's look at Apple. Everyone likes Apple or Tesla. Or let's look at any individual stock. So we're going to talk about just the half trend and how successful the half trend indicator is. Now, it's important to note that one indicator by itself is not a good. It's not good. You need to have a couple indicators because one person might tell you to go direction A, but when you have two or three people saying this go to that same direction, then you're more confident. And ultimately, if you follow just one indicator, even a good one like this, it'll cause you to get in and get out and get in and get out for no reason. You can avoid this noise when you add other indicators in, right? So they only pick up the ones that tell you to go buy it here because we're going high, sell it here. Well, you could sell it here. If you were to short that market or short that position, you would have lost or would have broke even, right? Told you to buy it here. Well, told you to buy it here, but it didn't really go anywhere, right? So when you look at indicators, you have to know you can't just base off one. You have to have a couple, and that's why I do. But I just want to go at a high level since the half trend is a really easy one to describe. Is it kind of looks at the trends of the market. It looks at the volatility. There's a lot more to it than I can speak to on at a high level. I mean, at a good level. But long story short, you can see that hey, it gets a lot of false signals that I will show you how to weed out, but I'll also let you know pretty early when to get in. If you were to wait for this candle to print, which reminds me, I have to give a video on what a candle means. This is called a candle, right? These are candles. When this candle prints and the next 15-minute block opens up, you should buy. You better buy here, be shorting here because it's going down. If you trust your indicator. Right. So it's sort of a convoluted video that I'm making this morning. So we've talked about at least some of at least the half trend indicator. You can see how it works and when it tells you to get in and when to get out. I can show you how. I guess I go ahead and do this now. Let's work on weeding out some of these false signals. It tells you to buy, it tells you to sell, and it wasn't true. In fact, when it told you to sell here, and then it rose up. So how do you avoid this? Well, you have to add indicators. One of my other favorite indicators is the SSL hybrid. Now, the SSL hybrid does something interesting. It lets you know the trend of the market and the strength of the market. So you would only take a blue buy symbol if this SSL line is blue, right? You notice how we get a red symbol here? Sell. Wait, my line is blue, so forget you. I ignore you, all right? Blue, oh yeah, blue line and a blue symbol. Oh yeah, rock it out. Come over here. Red, no thank you. Right? Red, no thank you. Yeah, it fell a little bit, but the overall trend of the market is swinging up. Okay? We come over here to this buy symbol. Oh baby, there's no doubt. I'll take that trade. I got a sell symbol here. No thank you. You see, you can weed out the fake and false by just adding another indicator that help you confirm what you're seeing. We'll see it on the negative side. Come over here. Sell. Okay. Well, I think I would take that trade, honestly. If you're coming in here, you're seeing this doji looking candle, which I'll describe later. See this little thin candle, and you see a red triangle, and you see a red line. Oh yeah, this market, this turn, this wave, as we'll talk about how the market goes in waves, that wave is coming to a close. But if you didn't believe it then, you'll believe it now, or you might believe it now. But when you see this, look at this. See this blue here? It's laughable, isn't it? It's laughable, isn't it? Now you know I would never use the half trend to follow the signal when I got a red line staring at me in the face, right? Same thing goes over here. See, if you were to follow just these indicators or Apple for this given day, we'll see how successful you would have been as a trader. 9:30 the market opened. At 9:30 on Tuesday, December 22nd, the market opened. You were under a red symbol. You were under a red sell with a red cable from the SSL. And if you were smart, and let's say if you had a short Apple, you would have sold this short, which means you were to make money on the way down. It's a little more difficult to short stocks than it is to use SQQQ or other negative or inverse ETFs. But this is why we use inverse ETFs, because we can play both sides of the market. But if you could, and you're smart enough to short Apple, you could short it there, and you would have made a killing, right? Boom, I'm going to short it. I'm betting you're going to go down, and you were damn right. It went down on that day. Hey, trust me, if you can look for other days where maybe this will be a good one. Other days where these indicators are say on a positive day, I don't know how to short stocks. I just want to make money in the market. Fine. Look, come here, and you got your blue sell, your buy symbol. Unfortunately, this one didn't pan out because it told you to buy, and then the next candle rose just a little bit, and then this third candle got you out. You have a stop loss, and you would have got out of that trade. This guy told you to sell, and you say, well, I don't think so. You're on my blue line. Wait for the next signal to come. Here's your next signal. Buy. Okay. I got a blue. I got my triangle. Got my line. Buy it. You would have rode this top here, right? This is called a wick to a candle. And again, I'll describe this later. But you would have made some money off that trade for sure. Before it came back down for the next candle, you would have already taken your profit. Now you're out of the trade. Let's imagine you took this trade and you took it and you rode it from here to there. And then when it started crashing down, you sold. Now you're out of the trade and you're waiting for the next signal. And here comes your next signal. Buy. Well, unfortunately, that was ugly. that was a cash out. That lets you nowhere. Because if you would have bought here, the next candle would have got you out. This is why we're only using two indicators. When you add the third indicator or others, you'll weed out some of these false signals. So we talked about the danger of having just one indicator, right? And how indicators need to work off each other. Am I still recording? Just make sure this is still recording. Hope I am not wasting my time with this. Oh, good. It's still good. We covered a lot of ground. I'll probably need to come back and cover this in more detail and different explanations. But the more indicators you've got, the more confirmation you've got, the more you can weed out false signals, either false sells or for false buys. Okay. What time is it? It's 8:37. So we'll create another video to show you how I look at the market to determine which way the market's going to go starting the trading day. All right. I hope this content was useful and helpful. I keep making these videos to kind of empty what I've learned in my experience to you guys. If you've got any questions, feel free to reach out to me. And I hope you have a great day. Bye-bye.